And the recent escalation between Iran and Israel, that triggered a pronounced risk-off shift in global financial markets during the week ended. That was earlier, around June 18th. Investors withdrew nearly $19.8 billion from global equity funds, the largest weekly outflow in 3 months, with U.S. equities alone seeing about $18.4 billion in redemption. In contrast, safer assets rallied. We saw bond funds attracted approximately $13.1 billion, and gold and precious metal funds gained around $2.84 billion. This classic flight to safety pattern reflects intensified geopolitical risk appetite, adding volatility to markets as we've seen oil prices plunge today, even though prices were staying elevated the week before. But things are unfolding, at this point. To help us unpack this now, we have Isaac Marshall. He's an investor with TLG Capital. Hello, Isaac. Great to have you.
All right, thank you.
Good to see you, Lottie. How's it going?
It's going good, Isaac. So, definitely it's all about geopolitical anxiety at this point. Is that all that's driving sentiment, with institutional investors, or do you see other factors like, U.S. trade policy, amplifying, what we're seeing with investor sentiment?
It's a really interesting time we're in, Lottie. I think there's a book by a gentleman called Larry Livingston called Reminiscences of Stock Market Opera. And what's fascinating about the book is that it's written back in the even actually part of it is even said 1890s. So he was a famous trader, more than 100 years ago. And would often shift in different directions purely based on sentiment, but not because of fundamentals. You would see markets dip and then markets float up because when it was a bear market and people were selling, then everyone would sell. When it was a buyer's market, everyone would buy. And I think a lot of that is really what you see is the reaction to the current geopolitical tension. I think a lot of it is momentum trades. And I think at the same time, you shouldn't underestimate momentum. I think momentum is an extraordinarily powerful force. And how markets tend to operate.
And, definitely we like to track, what institutional investors are doing, at this time. What are you seeing, so far? Now we're getting some kind of de-escalation, but we know how news is still unfolding at this point with the geopolitics there.
Yeah, I think, look, at the moment, again, we're an Africa-focused shop. Right. So I think for us, where we see the current situation is that in a very interesting way, the volatility in the markets have actually resulted in stability in some of the macro in Africa. If you think about it, about 80% of the exports of Nigeria are oil. Right. And when you have a situation where there is tension like there is in the Middle East, and also there is the expectation of future volatility, which impacts the pricing today of both the underlying asset and derivatives around the asset. You have a situation where the prices of commodities and oil will remain elevated. I think Goldman Sachs was looking at a report where if the Strait of Hormuz sees the impact that may be anticipated, you could see $100 plus oil prices. So at very least, whether that comes to happen or not, I don't think anybody can predict. Even the best security analysts might struggle to guess at what's going to happen in the current regime of international affairs. But I think what we do know is that volatility itself portends to higher oil prices, higher commodity prices. Those commodity prices in turn support macroeconomic stability in African countries. I mean, the big thing that folks are always worried about with Angola and Nigeria is that, okay, oil prices was lower, maybe that impacts some of the sovereign debt sustainability, which is, I think right now, no one has any sense that oil prices are going to stay low for a long period of time. And so for us, an interesting way, the market vol makes us more comfortable in the macro because commodity prices tend to improve economic performance in African markets.
All right, so at this point, where do you think investors will be looking to pile in cash now, especially like funds, like yourself? Are you still keen on, entering, some of the African economies so far?
Yeah, it's a good question. I mean, I think at the moment, if you remember, we spoke first about this, what is it, like 8-9 months ago. I think I personally and my firm, we've all been quite bullish on Nigeria for at least the past 9-10 months. I think we initiated a number of positions. We started a fund in local currency, and a lot of that was just on the conviction that when the naira was priced 1750, 1800, that represented a really attractive entry point. I think you've seen a ton of macroeconomic stability enter the Nigerian market. Not to say that that's felt by the everyday person in Nigeria, unfortunately, right? I think the reality for everyday people in Nigeria is still extremely tough, and I don't want to pretend that that's not the case. At the same time, I think there have been a lot of really quite orthodox policies that have been adopted by the government to sort of, reduce expenditure, take steps at improving the revenue collection base, things that folks have been talking about need to happen for a long time. But then also there have been some really unorthodox measures, right? I think the Central Bank of Nigeria has really been vindicated as doing a fantastic job at bringing stability to the banking sector, at preventing what seemed like uncontrolled inflation, and also at stabilizing the currency, which a year back we all thought would just keep free falling. And we've basically seen about the 9-month mark of a relatively stable currency. On the back of that, you see a lot of people trying to build. I see a lot of folks looking at making acquisitions, a lot of activity beginning to happen. I think international investors are still afraid to participate in the market because of the previous fall. But we just think it's a great entry point right now, especially where yields are. I think Ghana has been another good entry point. It's something we talked about, I think, 4 or 5 months back, and has also really played out in the improvement of the currency. I think there's a lot of optimism, and sentiment just plays a really, really powerful role at when it makes sense to get your entry point into these markets. I think both Ghana and Nigeria are coming out of very, very challenging couple of years of macro. In fact, across Africa, post-COVID, post-inflation, has hit everybody really hard. In Kenya, I think you're seeing more stability, but Kenya, I think, is a slightly different kettle of fish because, there's a lot of questions about what the political administration is going to look like. And the youth continue to exercise their conviction that they are looking for government officials to serve them. So I think it's really quite country specific on one hand, but generally speaking, I think that a lot of African countries are coming out of economic difficulties, and as a consequence, we're generally optimistic across the continent.
Right, and talking about most of the African countries that are coming out of difficulty at this point, with what we're seeing play out in the Middle East, do you think that could be a major headwind, at this point for most of these economies?
Heck.
And you've seen that Ghana, CD, their best performer, so far this year with the currencies.
Yeah. I mean, no, to your point, Lottie, I heard something really funny. Someone was flying to Nigeria for the first time, and their flight was going via Dubai, and they were concerned about, going through Dubai. And when an American is more concerned about flying through Dubai than flying to Nigeria, then that obviously portends well for African countries. So I think it's really, really positive, to be honest. I think the volatility has a silver lining where, as long as African countries can and African entrepreneurs can continue to build and take advantage of the opportunities, of every opportunity that they can, I think that there's a real opportunity to demonstrate that Africa is a uncorrelated market, is a risk profile that is different and is distinct from the rest of market assets, which basically have experienced broad-based fall really since the election. And so I think there's a ton of opportunity to basically see Africa as a much safer market in a context of a more dangerous world.
All right, definitely. What do you see, going forward now for the rest of 2025, especially for the CD, the Ghana CD and the Naira?
That's a good question. I mean, look, I think where I feel comfortable is, as a firm, we don't think that you'll see more steep depreciation. I think that you could see some depreciation because the reality is that inflation figures in both countries are still elevated. And you still have, I mean, look, it's still a very challenging economic environment in the sense that the way that you tackle inflation is that you make more goods and services locally. You reduce your imports, because as long as you're importing tons of goods, you're continuously creating selling pressure on your currency to buy the dollars that you import the goods in. So I think while there's a number of positive developments, I don't see manufacturing, I don't see electricity provision, I don't see sort of these security concerns at a very fundamental level improving markedly. And until and unless those conditions improve, it's very difficult to say, with confidence that the currencies are going to go up. But there's been enough depreciation that I think you're sort of on a stable base now where you can build and the rates of return will exceed where the currencies have lost. And that's sort of the view that we take, particularly as a lender, where we can get a fixed return and also hedge our investments.
Fantastic. That's a good place to anchor it there. Thank you so much, Isaac Marshall, an investor with TLG Capital. Thank you for coming on today.